Hello and welcome everyone to the week ahead commodity report for the 29th of April to the 3rd of May, presented by myself, Phil Carr, at the Gold and Silver Club. So today, of course, we will be reviewing gold, silver, crude oil and platinum for the week ahead. So first of all, we'll just have a review of last week's price action. On Friday, we saw gold jump to 2-week highs as the US dollar slipped and sold off, following on from US inflation data. Meanwhile, last week, we did see oil prices. At the start of the week, they climbed higher, up 4%. In fact, oil prices at the beginning of this week were up over 10% for the month of April, which has been very much in line with normal seasonality over this month, April being the strongest month of the year for crude oil prices. However, oil prices fell 3% on Friday after US President Donald Trump again pressured OPEC to raise crude production to ease gasoline prices. So with that, we'll move over to the charts. We'll talk you through our expectations and forecasts as we go into next week. Firstly, let's start off with gold here. So certainly, if you watched our midweek report, gold has really played out perfectly here. So what we've seen is pressure to the downside at the start of the week, taking gold back down to 1,265 US dollars per ounce. From that level, we have springboarded higher, and we've met that expectation this week for gold to move within a 200-point range. So the midweek report that we put out, we suggested that gold was going to be able to rotate back towards that 1280 and 1290 zone. And in fact, we saw that exactly on Friday with a break all the way out to $1,288.50 per ounce. We also saw that very typical US dollar strength come back into the market on Thursday. As I mentioned previously, so far in 2019, the US dollar has rallied 87% of the time on a Thursday. Again, what you need to be aware of on the dollar is speculators have raised their net long positions on the dollar to the highest level now since December of 2015. For gold and silver, we have seen hedge funds and money managers, they have increased their net sell short positions again in the latest week. Although we're seeing a rally to the upside at the moment, be a bit careful here. Next week on Wednesday, we have the FOMC statement. That will very likely be a big market mover, particularly for gold and silver. Now, overall, the month of May is not normally very supportive for the metals. In fact, normally it's a bearish month. We are long on gold at the moment going into next week with our stop loss protected by being moved higher, and we've also banked some partial profits here too on Friday. So what I would look out for though is the potential for gold to go higher if we break back above the weekly highs going into next week. So if you look at the weekly, we've had quite a strong rejection candle which is formed on the weekly chart. In the early part of the week, in the lead up to the FOMC statement, I would be looking to see if we get evidence of further follow through. If we can break back above the weekly highs, the next major level would then be 1,295 US dollars per ounce. If gold can get some follow through in the lead up to Wednesday's FOMC statement. So essentially on the daily chart, if we break back above Friday's highs, break back above the neckline, I would then look for a push higher, taking the price back to approximately that 1295 zone. If we were able to break out slightly further than that, I'd then look for a move back up to approximately that 1298 to 1299, 1300 zone, just above that. That is where I would look out for potentially sellers to come back into this market. Then if we move over to silver, very similar in terms of our expectations going into next week. Silver has also rebounded here off the swing lows, found support at the lower Keltner channels. As we go into next week, I would expect the potential for silver to gain some momentum here in the lead up to the FOMC statement, but we've definitely got some overhead resistance here to contend with at the moment for silver. So if we were to get some sort of a breakout move, I'd look at $15.10, and then the next major levels just overhead, if we were to follow through a bit further than that, would be essentially around the monthly pivot at $15.21 if we did get some follow through to the upside. But again, I would just bear in mind that hedge funds and money managers, they've reduced their net longs, and we're seeing sellers come back into this market. So rallies may get sold into, and the month of May tends not to be such a strong month for the precious metals. However, that said, if we move over to platinum, hedge funds and money managers have actually increased their net longs, and we are seeing a lot of support at the moment around this 878 US dollar per ounce level. We've seen that provide support again last week. We're really ricocheting between 878 all the way up to that 915 zone. The expectation again next week for platinum from this range bound market the platinum is in at the moment. Obviously, if it can break out and close back above this level of resistance, we should then see it staircase higher and start to make a move up to that next major level overhead, which is 957 US dollars. So the anticipation would be that we might ricochet between support and resistance here for platinum at the beginning of the next week until we get to the FOMC statement. If we can break and close above resistance and then previous level of resistance then turns to support, we could then start to build a base here for springboarding higher up towards that $950 level. That's what I would ideally look out for platinum. Otherwise, if it does pull back and we start to see a rotation back towards 880 US dollars per ounce, again, I'd look for evidence of buyers to come back in and potentially just buy in quite tightly at that level of support there, as long as we see buyers coming back in on lower timeframes there. So platinum is well worth having on the radar. And again, hedge funds and money managers, they've continued to buy the dips here and accumulate net long positions on platinum. Then finally, moving over to crude oil. So we did see quite a significant move to the downside on Friday, following on from comments from Donald Trump that he had spoken to OPEC to pressurize them to raise crude production. And with that, we did see an escalation to the downside. So we've seen 3.6% move on Friday here. So quite a significant sell-off. That said, we were getting quite overbought here on oil. So we did see the potential for a rotation lower from the upper end of the Keltner channels. We've essentially hit all of the targets that we had discussed previously on last week's report. So we suggested that Brent crude oil, we were looking for a breakout back towards 74 US dollars per barrel. That is the level that was hit last week. So we've hit and fulfilled all of the profit targets here. In fact, at the peak of these moves at the beginning of last week, oil was up over 10% for April. And as we've mentioned before, April does tend to be the strongest month of the year for crude oil prices. So you just want to take note of that for future years as well. It's a month where you want to be capitalizing on that upside, as we have done so at the Gold and Silver Club. But where we are at the moment is going to be very interesting, because normally the month of May is quite supportive for oil prices too. But the end of April and the very beginning of May, the expectation is that typically we do see a pullback on oil prices. So what I'm looking out for here, if you look at my charts, I'm actually looking to see whether we will get a revisit back towards the midpoint of the Keltner channel here. And I would be looking for evidence of support to come in at that zone. So approximately $70 per barrel for Brent crude oil. If we revisit that level and we see evidence of buyers coming back in on some of the lower timeframes here, especially around midweek, around the FOMC statement, or later in the week around the non-farm payrolls, I'd be looking for evidence to see whether buyers do come back in at that zone in order to then buy back into this pullback. So essentially between the Keltner channel and also the 21-day moving average, if we hold that level, we start to springboard off that zone, I would look to buy back in at these levels. Bear in mind that hedge funds and money managers, they do continue to buy into oil. We're at the highest level now in 5 months in terms of overall net longs in oil, but there's still potential for quite a lot more upside. And usually the month of May is also very strong for oil prices too. If we were to just not get any support at that zone, and if we were to break and close below all of that support on the chart here, then we would reevaluate that. But at the moment, overall, we're looking to buy back into this dip around $70 per barrel on evidence that we're definitely getting supported at that level. We also want to keep an eye out for next Wednesday's crude oil inventory data, the FOMC statement, and Friday's non-farm payrolls. So as you can see with the FOMC statement, non-farm payrolls, and where we are poised at the moment with a lot of commodities as we head into May, there are really going to be some great opportunities to capitalize on. Now, if you would like to join us at the Gold and Silver Club and join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars throughout the week. You get our real-time trade alerts alongside trade management, access to all of our trading research and market insights. You have your own individual logins to our private members academy website, alongside access to support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And also do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.